Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Going to get an update now on how this Q1 earnings season's been going with our research director, Shiraz Mian. So I'm almost afraid to ask, but I will anyway. Do you bring any good news with you, like maybe the earnings recession's going to come to an end soon?
No, not that good. The recession isn't ending. We are on track for the fourth quarter in a row of negative earnings growth. They'll most likely continue into Q2 as well. But there is some improvement. There's more positive surprises, and revisions for the current period are not as bad as we have been seeing in recent quarters. It's not all bad.
I want to elaborate on that just a little bit, the positive surprises. Could it be that maybe the expectations were so low going in that anything positive seems great now?
Absolutely. That's the core driver for why we are seeing more numerous positive surprises. Initially, when I was comparing the surprises at this stage to what we had been seeing in the prior year, we were notably above. So I went further back and looked at the preceding 12 quarters, 20 quarters, and it's off the charts. And the primary reason is what you pointed out. Estimates had come down so much that it was very easy for companies to jump through.
So have the headwinds abated much at all?
A little bit. There is some improvement in the headwinds. The big ones remain, but on balance, there is some improvement.
So, for example, you're not, from what I'm hearing anyway, correct me if I'm wrong, you're not hearing, or you're not saying that maybe stabilizing oil prices, fading dollar pressures might help to cause earnings to recover later in the year?
The energy situation is favorable. If we see this thing remain in place over the coming days, over the coming quarters, that will be a big boost to estimates. And the dollar is a big improvement too. I mentioned the low expectations being the primary or big driver for why we have so many positive surprises in Q1 thus far. If there is any other factor, I would cite the decline in the dollar's exchange value. On the margin, that's been helping companies come out with positive surprises and less bad outlook. It's still bad, it's still negative, but it's not as bad as everybody was looking forward to about a month, 6 weeks back.
All right, run down the scorecard for us.
Okay, I have the data here. What do we have as of today? 209 S&P 500 companies have reported results. That accounts for about 52.4% of the index's total market capitalization. So in a way, you could say that for the S&P 500, we are past the halfway mark. 5.5% total earnings decline on 1.6% total revenue decline, as we could see in that highlighted row. 75.6% are beating earnings, and 56% are beating revenues. If I put this performance from these 209 companies in a historical context, as I was mentioning earlier, the left-hand side chart is comparing the growth rate from these 209 companies, earnings and revenue, with what we had seen from the same 209 in the 4-quarter average and the 12-quarter average. In any way you look at it, the growth picture is ugly. But when you look at surprises, they're far more numerous, as we were discussing earlier. 75.6% EPS beats, which is above the 4-quarter and the 12-quarter average, and same on the revenue side as well. So very numerous positive surprises.
All right, and the today you talk about is April the 27th.
That's right.
So far this season, what's been the worst performing sector?
You know, nobody really stands out. They're all on the weak side. But if one sector I had to pick on, which you are egging me on to do, I'll do that with technology. Unlike The other 15 sectors, technology did not really experience as much negative estimate revisions as everybody else did. And that's partly perhaps an explanation for why everybody is so disappointed with Apple and Google and Microsoft and Twitter. Google and Microsoft particularly had very strong numbers in the 2015 Q4 quarter. So that kind of took expectations to a level which never really came down as they did for pretty much every other sector. So tech is tracking below what was expected and what tech has been doing. The growth picture is as bad for tech as it is for the broader index, but there's not that many positive surprises in tech either.
All right, so if I'm hearing you correctly, the main theme is it's still all about expectations.
It's all about expectations. It's expectations. If expectations come down and then companies are able to beat them, if expectations for the current or the following quarters are coming down, that makes them relatively better when those results come in. So it's all about expectations. What companies do in absolute terms doesn't really mean much. It's what they do relative to consensus expectations which drives the stock price.
Right. All right, thanks for that. And in between these video updates that we get with Shiraz, don't forget you can always get more earnings information on our website, Zacks.com. If you're not there already watching this video, Shiraz has his written earnings outlook commentary. He also comments on the day-to-day nuances in earnings, and especially in relation to the stock market during these peak reporting times in his Ahead of Wall Street column. That's on Zacks.com. And then you can get other individual company stories, too, that have to do with companies reporting during these periods of the year. All of that and more on Zacks.com. Link to it all off the homepage with Shiraz. I'm Terry Ruffalo.